a week.
Hello, welcome to the program. Ahead, has Nine's private equity owner been able to cut a deal with a major lender to reduce its multi-billion-dollar debt levels? The latest forecasts for the best performing media sectors next year, and we'll be joined by Melissa Hay, the head of TV at media buyer OMD, to look at the ad rate negotiations between the TV networks and advertisers for 2012. But first, to the contract for the government's Australia Network overseas television service, which was awarded to the ABC permanently this week. Sky News and the ABC had been bidding, but the tender was abandoned a month ago after media leaks. 2 investigations are underway into those leaks, and it was thought a decision would be made after those reports were released next year. Sky News says it expects to be fully compensated. Our co-host James Manning, the editor and publisher of Media Week, is here with analysis of this. The Prime Minister, Julia Gillard, defending her handling of this, the government's handling of this process. How much of it has been about a power play inside Labor?
Well, it seems to be, doesn't it? They just, both sides had different, they clearly don't like each other, and they both sort of were pushing their own side, trying to get the edge in this. Politicians can't help themselves getting involved in media matters. They just love to dabble with them. $20 million a year, $200 million over a decade. It's not massive in terms of budget spending, but just look at the fiasco over sort of the anti-siphoning, for example. We're still not, we've been waiting and waiting for some guidance, some clarity there, what's happening, and now we find out it probably won't happen to the middle of next year either. So when it comes to media matters, everybody likes to have a little bit of an input.
Now, there has been some concerns raised about how the funding is going to be kept separate from other ABC dollars. The ABC Managing Director, Mark Scott, did have something to say about this during the week. Here's a little of what he had to say.
What the government has said is this will now be a core responsibility of the ABC, and we need to deliver this core responsibility the way we deliver ABC One and Radio National and Triple J. We're going to view it that way, a core part of our operations. It's going to be properly resourced, it's going to be a strategic priority, and we'll report on our performance over time to the board, to the government, to Senate estimates, to the Australian public.
So, James, how will this work then with funding?
Well, when he said they're going to make it a core part of their offering, well, if it's going to be that, they'll still have to, I guess, keep a separate set of books, won't they, to just sort of track that, to see, that the money doesn't get rolled in and then sort of helps spread across perhaps other arms of the ABC. There was also a mention they'd like to bring in Radio National, combine it like the BBC's done with their World Service and their national television and radio sort of assets. If that happens at the ABC, will they be able to manage to do that financially?
And just finally, what message does this send to any other companies that are bidding for government investment via a tender process? Well,
I guess it'd make you a little bit doubtful of the process, wouldn't it? The government awards a lot of business via tender process. If they look at this one as an example of how badly things can go off the rail, you'd certainly be worried about, the outcome of any tenders you're a part of.
Thanks for that, James. Another major story in the media sector this week, Nine Entertainment's private equity owner, CVC Asia Pacific, has reportedly agreed a deal with a major lender, Goldman Sachs, to reduce its multi-billion-dollar debt pile. That's according to the Australian Financial Review, and AFR journalist James Chessell joins us now from our Sydney studio to tell us a bit more. Can you just explain these reports for us, James? As we understand it, it's basically people with a high risk tolerance replacing people with a lower risk tolerance in terms of the debt at Nine.
Yeah, hi Bridie. It's obviously a complicated situation at Nine, but I think the best way to think about it is that there is a business, Nine Entertainment Co, that would probably be worth about $2.5 billion if it was listed on the share market. And over the past 3 or 4 or 5 years, people have invested $5.5 billion. So there's a $3 billion gap between what the company's probably worth and what people have put into it. And we're now in a process where the investors, and we're talking about a private equity firm called CVC, we're talking about a fund run by Goldman Sachs, and we're talking about a bunch of different banks and hedge funds, have got to sort out how they're going to deal with this $3 billion gap, who's going to have to take the pain, who's going to have to take the haircut. So what we wrote today is that one of those lenders, Goldman Sachs, has tried to strike a deal, or has struck a deal with CVC, the private equity firm, where about $1 billion worth of debt would be collapsed, which is effectively written off, in order to give them some upside in the business should it do better in the future. And that sounds like progress, and it is in a way, but it's not positive in the sense that Goldman Sachs are effectively saying that $1 billion worth of our debt is not worth very much money. So that's the kind of situation we find ourselves in.
Hi, James, and look, continue keeping it simple for me too. What is the worst case scenario out of this for CVC? And say there was a road to recovery, how long could that be?
Hi, James. The road to recovery ends in February 2013. That's when a lot of that debt has to be paid back, and it can't be paid back. So that's why we're getting a lot of negotiations going on at the moment. The worst case scenario for CVC, and probably a likely scenario for CVC, is that they walk away from this and they put $1.9 billion of its own money in. They walk away with a tiny, tiny fraction of that amount, and that would be one of the biggest private equity losses in the world, which is why there's a lot of interest in this story. It was the lead story on the FT this morning following the story in the Financial Review. It's a lot of interest with everyone. The other dynamic I should mention is the lenders to this business, Nine, used to be traditional banks like CBA and some overseas banks. They're now being bought out by a bunch of US mainly hedge funds who have a pretty sort of voracious and aggressive attitude to life. So that they're trying to work out an angle. They're buying the debt at, say, 86 cents in the dollar, and they're trying to work out a way of maybe edging out CVC, taking control of the business itself, and seeing what they can do with it. The final thing to keep in mind, I guess, for people who watch Nine on the television or read ACP magazines or work at Nine, is the actual underlying business isn't doing too badly. And in a way it's kind of separate to what's going on with the financial structure. The business itself is still earning decent money, and as long as it does that, you know, some of this stuff is sort of separate to the operations on a day-to-day basis.
Just a bit more, I guess, on the future then, because there had been talk that Nine may have to offload some assets. What do you think the intentions of the hedge funds are then? And what about the plans that were shelved for an IPO of Nine as well?
Yeah, so they were, back when the markets were positive and where people were a bit more optimistic about life, they weren't far off an IPO, or at least trying to do an IPO, which just shows you how big the swing in global financial markets has been. So there's a couple of parts to your question. The hedge funds want to grab control of this business. They want to turn all this debt they've bought. So they would own about now probably up to 50% of Nine's senior debt, which is their main debt. They would own about half of that. They'd love to convert that to equity, and they'd love to kick out CVC and control the company. So it'd be a change of ownership, basically. And to do that, though, they've got to go through a lot of negotiating, a lot of legal wrangling and all that kind of stuff. In terms of asset sales, which was the first part of your question, I think Nine really needs to keep hold of what they have. You know, they'd probably love to sell the ACP magazines business, but that's not going to happen because there isn't a buyer for it. Because if anyone wants to buy into the business, they need the business to be in a strong shape. So it's actually in everyone's interest, the current owners or the future owners, that Nine continues to perform well, which actually puts the CEO, David Gyngell, in quite a strong position, because the hedge funds want him to continue running the business if they manage to get it off CVC. CVC want him to run the business well now, so it keeps paying its interest bills on all that debt. So he's sort of an important figure in this, because he'll be sitting there going, well, I've got to work out, you know, future owners, current owners, how I deal with that. They both think I'm doing a good job. How do I play that situation?
James, really appreciate your time. Thanks for that. Well, of course, Nine's debt woes, as we were just hearing, being closely watched by traders, even though obviously it isn't listed. Also under scrutiny, though, is APN News and Media, which held an investor conference on Monday. Here's Chris Weston from IG Markets with the details on those stories and the rest of the sector's performance this week.
Good afternoon, Bridie. We've seen a bit of an outperformance amongst most of our media stocks this week. In the last 5 days prior to today, we had seen the overall broader ASX 200 up about 4%. It's been a pretty good time to be investing. However, I think if you look at the media stocks, Southern Cross Media, clearly the standout. That was up about 9% prior to today. News Corp up about 5.5%, given some of the better US data we've seen and the leverage that stock has to the US economy. 10 Network up about 2-3% as well. So that's been a good place to be. Now, Seven West Media has done very well indeed. It's up about 2%. And I think part of the reason we've seen that is because we did see Citigroup at the back end of last week upgrading the stock from a buy to a hold recommendation, increasing that 12-month price target from around $2.90 up to $3.75. So that's obviously been quite a good place. If you believe the upside to that price target, that could be a good place to be in 2012. Now, APN, I talk about it pretty much every week at the moment. The woes continue for the stock. It traded down to a new all-time low, 70.5 cents. Now, we did see a strategic investor day this week. Didn't really see anything really too positive from the stock. The stock has fallen since. We did see some changes to its forecast in terms of publishing EBIT, and as a result, some of the brokers have downgraded the stock in terms of earnings per share. Macquarie downgraded their full-year earnings per share by 10%, 11% for 2012. Now, given APN do make about half of their year's earnings through their publishing division, you can see it's really been suffering from some of those longer-term margin compressions at the moment. Now, the stock is dirt cheap at the moment. It's trading on about 6 times forward earnings, but I think given the risks that are having and the headwinds that the company has at the moment, people are really quite sceptical that they're going to continue to meet these earnings guidance in 2012, hence why we haven't seen too many people piling in, and they expect some downgrades going forward. We will have to watch for that trading update, which is likely to come in February, potentially the next catalyst. Now, they did outline some of the future blueprint, including some of the production improvements, some of the content improvements, and big investments to try and grow market share. So that's one to watch for 2012 for sure. And then we've got Channel 9. OK, you can't invest in the company at the moment, but there's big issues going on there. Some of the hedge funds are playing around with some of the second-tier debt. Goldman Sachs are looking to potentially convert nearly $1 billion of second-tier debt into equity, which will make Goldman Sachs effectively realise some of the profitability in that. But big times for Channel 9, given the huge debt loads the company has and what some of the hedge funds have been doing with their second-tier debt as well. It's an interesting week in Media Week this week.
Yeah, and an interesting move at 9 too. James has the details. We've been hearing that the head of publicity, Heidi Virtue, is leaving.
Yeah, fairly crucial role at the network, you know, and a very specialist job too. Not a lot of people do it over the last 10 to 15 years. There's probably been 2 people who did it for a long time. It was Jamie Campbell, of course, who's now at Foxtel doing a similar position. Andrea Keir did it for a long time. Now she's works in the entertainment business in the US. So it won't be easy to find a replacement. 9 have flagged, look, we'll probably announce a replacement early in 2012.
Yeah, we'll wait for that. Now, interesting, you mentioned there Foxtel. It's gone and flipped its HD channels to replace its SD channels.
Yeah, pretty clever move, really. So it's a bit awkward to explain, but the youths have to go somewhere else to watch, say, the HD version of the Lifestyle channel or Fox Sports. They were segmented in a separate place on the channel guide. Now they're not there in the traditional places, so I think it's 106 for your Lifestyle channel. You'll automatically get the HD. You go up to the sports channels, you'll automatically get the HD versions of all those channels. So if you're on that sort of IQ with the HD facility, it's great news for you.
And it's the first week on the job for the new CEO of Foxtel and also the new boss as well at News Limited following all the changes.
Yeah, the old Foxtel boss, Kim Williams, turned up for work at News Limited on Monday. I think we've heard that he spent the first week of the business sort of pretty much in Sydney in meetings, I guess getting to know all the people that report to him and finding out, you know, their priorities. Stuff there will be, you know, he's got a massive audience. It'll be, you know, the digital challenge there, you know, he's always been, you know, everybody's had to pay for everything they get from Foxtel, so he'll be sort of wondering perhaps why that doesn't happen at News. You know, he'll be sort of asking people why are we giving away a lot of content. And then Richard Freudenstein, of course, he's the new chief at Foxtel here. Again, he used to work here in the 90s. An interesting stat I heard this week, back then he had everybody that worked at the company around to his place for a celebration. It was only 35 of them now. There's about 4,000 now, so he won't be asking everybody around for drinks at this Christmas, I don't think.
It would be a very big drinks bill. Thank you for that, James. We're just going to take a very quick break here on Media Week. After that, we'll be joined by Melissa Hay, the head of TV at OMD, to chat about the TV ad rate negotiations for 2012.